All right, so I've decided to switch my mortgage from a variable rate to a 5-year fixed rate mortgage, and I'm going to explain why. So I'm going from Desjardins to Nesto. Now, obviously, it has nothing to do with Desjardins. It has nothing to do with the banks itself. I could have taken a 5-year fixed with Desjardins to begin with, but I made the mistake of taking 5-year variable. But I want to say why I'm going to be taking a 5-year fixed. So October 26th, Bank of Canada announced an interest rate hike of about 0.5 or 50 basis points. So that puts the Bank of Canada's policy rate at 3.75, which puts the regular bank's prime rate at around, I believe, 5.9 or something. Yeah, so prime rate in Canada is 5.95 right now. So if you have a variable rate mortgage, it's usually prime minus a discount. I think my discount's about 0.85. So that puts my current variable rate mortgage at 5.1. Now let's look at some pieces of the announcement, and I'll just give you my opinion on why I think it's best to go for a 5-year fixed.
Today we raised the policy interest rate by 50 basis points to 3.75%.
So there you go. They raised it by 50 points. We were expecting 75, but they raised it only 50 points. So that's sort of good news.
We also expect our policy rate will need to increase further.
Okay, so they are expecting to increase further. So that's a good piece of information to help you decide whether you should stick with variable or switch to fixed.
How much further will depend on how monetary policy is working to slow demand.
There you go. But we don't know how much further. So once again, there's an unknown. There's an element of mystery, which I personally don't like.
How supply challenges are resolving, and how inflation and inflation expectations are responding to this tightening cycle.
See, it's how inflation is responding to the interest rate hikes. The thing is, I personally don't think the inflation is caused by, it will be fixed by interest rates, because in my opinion, inflation was caused by the lockdowns, the supply chain issues, by the government increasing taxes on gas and making transportation more expensive, making goods more expensive. So I don't think interest rate is going to fix the inflation. It's going to fix house inflation or home inflation. It's going to make people lose their homes. So people are going to spend less. So it's indirectly making people spend less, but people are going to suffer before inflation will be fixed. But I don't think they're tackling the true cause or the root cause of inflation.
This tightening phase will draw to a close. We are getting closer, but we're not there yet.
Okay, so we are getting closer, but we're not there yet. So that means they're going to continue increasing, but they're almost done. That's based on what he's saying. There's no guarantee that they don't change their words later. But for now, they're almost done increasing. So maybe one more increase, or maybe two more, but then after that, we'll see what happens. But still, once again, for me, there's too much uncertainty, so I don't like that.
Well, we did 100, we did 75, today we did 50. We've signaled very clearly that we expect rates will need to rise further. That could mean another bigger than normal increase. It could mean that we can move to more normal size 25 basis point increases.
They can still continue to increase, but the big increases are going to slow down. But it doesn't mean that after the big increases slow down that they're no longer going to increase it. They just might increase it slowly by 25 basis points like they used to do before.
Look, we need to do what we have to do.
See, I don't like hearing that when they say we need to do what we have to do. So basically, they don't care about the consequences. They're focused on one thing, and if anyone gets hurt in the process, it doesn't matter. He's going to say it now.
We have a very clear mandate.
They have a clear mandate, so they're just focused on that mandate, and it doesn't matter what happens on the side.
Gouverneur, merci de prendre nos questions. Vous dites que vous voulez balancer les risques des deux côtés, mais tout de même, il y a des gens qui sont inquiets de devoir peut-être rapporter les clés de leur maison à la banque parce qu'ils ne peuvent plus payer leur hypothèque. Alors, comment vous assurez qu'une hausse supplémentaire n'est pas une hausse de trop? Quels sont les indicateurs qui vont vous permettre de savoir que votre approche ne devient pas trop agressive?
So now this reporter is asking, people are concerned that they might lose their homes, they might give back their keys to the banks. So how do you know that an extra increase might not be too much? And how will you measure how much to increase so that people don't lose their homes? basically the reporter is asking.
On est très conscient que les hausses des taux d'intérêt sont difficiles, surtout pour les
So he's saying he's very conscious that it's very difficult for homeowners to pay for their mortgages right now due to the interest rate hikes. So he's very conscious, he's very aware. But then, what next?
Canadiens qui sont endettés. Les hausses des taux pour les hypothèques a déjà eu un effet marqué dans le marché du logement et on voit maintenant que l'activité a baissé, a fortement baissé. Et
Okay, he's saying the interest rate hikes have made home prices drop, which is, I guess, a good thing because it was ridiculously high.
les prix sont à la baisse aussi.
But
On regarde
he hasn't answered the question. What about the mortgage payments?
de près ces ajustements. On est très conscient que l'ajustement et le taux d'intérêt plus élevé est difficile pour plusieurs Canadiens.
So he's repeating again that he's very conscious and they're looking at it carefully, but that's it.
Mais je veux souligner que l'économie est en demande excédentaire.
So he's going back to the economy being in high demand. So going back to the excuse that he has to increase interest rate to fight inflation. So going back to he has a clear mandate. He has to do what he has to do. He's not really answering the question. He's just saying, I have to keep doing what I have to keep doing.
Surchauffe. Et l'ajustement qu'on voit dans l'économie et même l'ajustement qu'on voit dans le marché du logement, c'est un aspect de l'ajustement pour mieux équilibrer la demande et l'offre dans l'économie pour réduire les prix.
So yeah, he's saying that's just a part of the battle, a part of fixing inflation, fighting inflation. When you increase interest rates, yes, mortgage payments will go up, home prices will drop, but that's just part of it.
Pression inflationniste. Donc, on regarde cet ajustement de prêt. On ne veut pas élever trop, augmenter les taux d'intérêt, mais on veut être confiant que l'inflation va retourner aux cibles.
So he's watching it. He doesn't want to increase rates too much, but he does want to fight inflation. But he does not give a comforting answer on how to make sure that people don't lose their homes.
Ça, c'est notre mandat.
Once again, this is our mandate. So yeah, he's focused more on inflation. Anything that happens afterwards, any consequences that happen afterward, is just part of what he has to do. He has to fight inflation. His clear mandate is to bring inflation down. So to summarize, first thing he mentioned is that it's coming to an end. So if it's been, let's say, 6 months that they've been increasing rates, it's not going to be another 6 months, or else he wouldn't be saying it's coming to an end. So if it's coming to an end, so you would have to add a shorter period than what has already gone by. So maybe another 2 months. So I'm assuming maybe end of this year, end of 2022, another increase. But then all of 2023, they keep it flat. And then in 2024, they start reducing rates. But I think that would be the best case scenario. So even if they do that, my rate right now is about 5.1. It's going to get increased again because they're going to increase again in December based on what they're saying. And that's best case scenario. And then I'm stuck for an extra year at 5.1 or even higher than 5.1. So let's say they increase another 50 points. So I'd be stuck at 5.6 for an extra year. And then in 2024, if they start reducing rates again, and that once again, that is best case scenario. That is if everything goes as expected, and that's if there are no other surprises. They start decreasing rates, and they're not going to decrease as fast as they went up. They're not going to decrease by 50 and 75 basis points. They're most likely going to be decreasing by 25 basis points. So all that time, why deal with all that stress and uncertainty? For me, it's just easier to fix a rate right now for 5 years, pay a penalty. It's my mistake for not taking a 5-year fixed, but it's a lesson I definitely learned. From now on, I'm always going to take 5-year fixed, even if historically 5-year variable has been cheaper in terms of interest paid overall. But I think it's worth it to pay that extra interest for that peace of mind and not being in control or not losing control of your payments, and not being in the position that I'm in right now where you could potentially lose your home because you can't afford making the mortgage payments that keep increasing. And even if rates do come down and I end up paying for an extra, let's say 20, 24, 25, 26, so probably for an extra maybe 4 years or maybe 3 years, I'll be paying a little bit more than if I had just stuck with variable. At the end of the day, it doesn't really matter because at the end of the day, I'll own a home, I'll have a home, I'm making a payment anyways, whether it's rent payment, whether it's a mortgage payment or a mortgage payment that's slightly higher. It doesn't really matter at the end of the day. But I think peace of mind is more important. And honestly, I'm gonna work towards paying off the mortgage quickly. So I'm gonna try to pay it off by the end of next term. So if I can take 5 years now, then I'll try to pay off by 2027, 2028. That definitely means less investing for sure. Or maybe it means more trading, more option selling, taking the profits and putting it in the mortgage. But that means I would have to generate profits from the option selling and finally find a strategy that works consistently, not just for a short period and then one bad trade wipes out everything. All right, let me know what you think in the comments section below. Thanks for watching.